Joining us now is S3 Partners founder and managing director Bob Sloan, along with Sarat Sethi, who is still here with us all hour long. So, Bob, we've got a couple of earnings coming up. We've got FedEx tonight. We've got Micron tomorrow. I think we've got Nike coming up. Anything you can kind of look at and tell us how you think those stocks might perform?
Well, we don't have a call on those stocks. You know, we do make individual calls sometimes because we think there's a tremendous correlation between short interest and some price action on some stocks, but we don't see anything for those stocks, and there's no call on those stocks for us. Over the next couple of days.
What about the market broadly speaking? Sarat and I were just talking about this, but we're pretty much back at all-time highs. So does that mean that, you know, that being short was a horrible idea, or that this is the time precisely to think about getting short or having at least a hedge position?
I think what really is what's on the other side. So investors need to avoid stocks where the actively managed long, and the short position are about equal. That is risk you are not paid to take. And the reason is because if you look at a portfolio of stocks that are battleground, equal amount of long, equal amount of short, those portfolios perform terribly. They are 65% drawdown and their volatility is like 50%. So, you know, $1 of risk gets actually zero reward. It's like negative reward. So identifying where there's a battleground, like Archer, like Kohl's, like C3 AI, those stocks are very risky. And if you have them in your portfolio, you should really think twice about being in it.
So what about the other side, Bob? What do you see in terms of maybe even sectors or some stocks that are very high on the short interest that could be very volatile coming into earnings or just in the next couple quarters?
Yeah, Rivian, Supermicro, that's the other side, right? Where you have short interest way bigger than the long. They're skewed short. Any negative news, you're going to see those stocks fall out of bed. No question.
And in terms of energy, we were talking about energy quite a bit on the show. What are you seeing in that sector? Anything specific there? I know you guys have published some stuff in the past, so that could be a very interesting area also to provide quite a bit of volatility.
Sure, absolutely right. You know, you're seeing increased short interest in the energy sector. People betting on a fall in energy prices, which is interesting. But that was pre-actually any ceasefire, pre any attack on Iran, pre-Israel attack on Iran. Pre-actually, you know, anything happening in the geopolitical space. So people have been shorting oil for you know, oil-related companies for quite a while. And look at Apache, for example. That is set up for a short squeeze, very high hard to borrow cost, super high short interest. But, you know, as the stock falls, shorts are going to make money. If the stock rises, you're going to see a tremendous short squeeze there. That's one we've always had our eye on.
All right. Bob, appreciate your point of view today. Bring you back. Bob Sloan of S3 Partners. And